Hey guys, what's going on? I wanted to make a follow-up video from my original QQQY video because some more information came out, and I obviously did a little more research myself to clarify these, their holdings. Because when I first made the video, I didn't do as much preparation, researching what exactly they're selling puts on. So again, this is kind of an updated video for the QQQY, the JEPY, and the IW, whatever the hell it is, the Defiance ETFs that sell daily options. So let's get into it. Oh yeah, and as always, I'm not a financial advisor, just a guy on YouTube trying to retire on dividends, sharing my journey, and I hope you guys enjoy. So this is the Defiance ETF website. If you haven't seen it before, pretty good website. They cover, just listing the funds. They have JEPY, as I mentioned, QQQY, which, again, these are the two we care about. And a couple, bunch of others that have different strategies, different usage. But right now, the usage for income, which is what we are, we're striving for income. These are the two. So if we go to the top and we check out the ETFs, obviously QQQY and JEPY, it doesn't matter which one we pick. I'll just pick JEPY. So as you can see, no distribution yield, no 30-day yield, just that they pay monthly. You can throw your email in there to get updates, and they get into it. They say this is they say the first put right ETF on the S&P 500 using daily options. So good. And they pay monthly. So this one is based on the S&P 500. QQQY is based on the NASDAQ. And this one's launched, so it's available to buy. Net assets 3.91 million, brand new fund. It launched September 18th, which was last Monday. Only been out, a little less than a week. Expense ratio 0.99%. Market price has kind of went down a little since launch, so I guess we can consider this a discount currently. I'll get into the top holdings in a second. Here's some fund documents, which I'll also get into. And here, this is new since my last video. They told us the remainder of the year what their distribution schedule is. So if you look, declaration date, for the next or first distribution will be September 29th, and that's this Friday. So this Friday, they will announce how much they're paying for JEPY and QQQY. And if you look, ex-dividend date is October 2nd, which is Monday, which means you have to own it by this Friday, September 29th, in order to qualify. So once they announce it, you can really decide then, okay, should I buy into it? Is it worth it? Or should you choose, you can wait to buy it Monday, because as you know, the ETF price will drop by the distribution amount on that date. So, whatever strategy works for you. I'm probably going to start buying this week. Not a lot, little by little. After I did a little further research, I do like this strategy. I do like this as part of my diversification into my portfolio. So, and I do like the payment date. The payment date is October 5th. So it looks like they're going to pay the first week of every month. So that's really good. As a Yield Max fund guy, I'm getting paid middle of the month usually, or third week, between the third, I guess around the third week, you could say. So I'd like to get a payment, weekly, realistically, which, it's not that easy, but at least now I have the first week covered. So if these do well, again, there is three of them. There's one for the Russell too. So if these three do well, then I could put a decent percentage of my portfolio in there, and I get paid the first week of every month. Cha-ching. The rest are just articles. So, and that's pretty much it. So I'm going to go, obviously they have a prospectus, and if you watch my first video on this, I did cover this in detail, and I will not go into too much detail, but I just wanted to remind everyone, I have this highlighted prospectus. Again, the prospectus is for the three funds, QQQY, which sells puts on the NASDAQ, JEPY, JEPY, which sells puts on the S&P 500, and IWMY, which sells puts on the Russell 2000. So I have this document saved in my Discord, which I will, I'll put a link on this under the video. So if you guys are curious or just want to read the highlighted version, I have it saved there. But again, I'll kind of skim through it because for those of you who watch the other video, I'm taking that into consideration, but I'm also taking it into consideration some people may not have. So this is kind of an updated video, but I still want to just cover the basics. The fund's primary objective is to seek income and exposure from the NASDAQ 100 index. Okay, we know that. Management fees, 0.99%. This is in line with the YieldMax funds, but they do daily options, so I would say 0.99% is worth it. They will not seek to take temporary defensive positions, which means, as you know, when you sell puts, that's a bullish move. You want the stock to go up, which we'll get into when we talk about the holdings. But when the stock goes down, we lose money. They're just saying they're not taking any defensive positions to protect that. So get ready for the possible downside. Blah, blah, blah. Yeah, they sell, it says they do at the money and in the money puts, which, makes it a little riskier doing in the money puts. Of course, you want the stock to go even further up than when it started for that day. You want it to go over the strike price they choose. It says, they'll sell up to 5% in the money. So that's good. I mean, it's good if you're bullish, again, on the S&P or whatever fund you choose. The expiration date is typically next day. How the hell do you get this stupid thing on the side? There you go. Sorry about that. They strive for a minimum daily income of 0.25%. I checked all three funds, and surprisingly enough, that's their goal in all three funds. I know they have varied volatility, which I'll cover that too in a second. That's the green is repetitive. And as I mentioned in the first video, the fund investment advisor and sub-advisor are the same as the YieldMax investment advisor and sub-advisor, which is Toroso Investments and Ziga Financial. The fund does not invest directly in the index. We know that. If you're familiar with YieldMax, some of this is, the same. This is interesting that the expiration dates will range from 1 day to a week. So that they could sell a weekly put. Similar to YieldMax. And again, sorry for rushing this, but I'm taking, again, since this is an update video, it's just kind of a quick recap. U.S. Treasuries securities as collateral. So similar to YieldMax, they're buying treasuries to earn additional interest, and they'll use that as collateral. Here's what they do. They sell puts at the money, in the money, and they hold treasuries. Yes, great. And, that's it. Again, I just wanted to skim through it. I'll attach, this is attached in my Discord under the files section, if you guys are interested. Now, let's talk about the holdings. Here's the holdings. Here's JEPY holdings. If you hit view holdings and you hit download, you can view it. If you're on a computer, obviously you can get it in Excel, or you can get it looking like this. So one thing I did notice on both JEPY and QQQY is they are not yet holding treasuries. Maybe they're waiting for a better price point. I don't know. So right now they're not earning interest on treasuries. Keep an eye on that as you check the holdings. I will as well. Maybe I'll make a short when they post that. And you'll see the they sell puts on the S&P 500 index. JEPY does, and the QQQY sells puts on the NASDAQ. So you'll see two stocks, right? ETFs, I should say, or two index acronyms. So what are they? I had to look this up myself. It's okay. So the QQQY has two holdings, XND and NDX. When I first made my video, I said, what the hell is that? That's not the QQQ. But it's smart. They're not selling puts on QQQ, which is good. They're selling puts directly with the the index, because QQQ, that's another fund. That's a fund manager. You don't know what they're going to do, so it's better to go directly to the index. So XND is the Nasdaq 100 Micro Index, and NDX is the actual Nasdaq 100. As you can see, price differential, the Nasdaq is 14,701, and the micro index is, much less than that, right? It's a fraction of that. So a hundredth of that, I should say, and it's 147.01. So it's, it's 2 decimals in. What's the point of this? Why do they sell puts on both? My thinking is the cost of the index, in case they have, especially when they started, right? They had a lesser amount of funds to work with. So maybe that's why they started out with the micros. That's my thinking. As they grow, maybe they don't need to use the micros. Maybe, well, for the Nasdaq they may, because selling one put is 14,701 times 100, right? So that's 1.4 million. I mean, so I get it. I get it on the Nasdaq. Nasdaq historical volatility is 17%. Okay, let's go into JEPY. They have 2 funds that they do, XSP, SPX. Again, SPX is the S&P 500 index. XSP is the S&P 500 mini. Same thing. S&P 500 is 4,320. The mini, actually, the mini is only 1/10 of it, so it's not 100th. Okay, so it's a little different. It's 432.01 for the mini. Historical volatility is 11%. Less volatile than the Nasdaq, as expected. Last one, IWMY. This is, again, the Russell version. It's not out to buy, but I'll do, show what I can. I'm expecting their holdings to be RUT and RTY. RUT is the Russell Index. RTY is the E-mini Russell Index. I found the price for Russell, $1,776.50. I did not find a price for E-mini. Maybe it's a 10th. Maybe it's $177. I don't know. I couldn't find it. So if you guys can find it, send me the link on the comment. Their historical volatility, 12%. Okay, it's close to the S&P, above the S&P, but it's not the Nasdaq. Now, they said, as I mentioned in the fund, they're going to make 0.25% daily, or they're going to try to make 0.25% daily, which, again, they'll have to be more aggressive on the bottom two, on the S&P and the Russell, less aggressive on the Nasdaq. So which should you own? That's up to you. Which am I going to own? All 3. Again, I want to see how they do. Same advisors as Yield Max, so maybe they'll do good. That's good and a bad thing, right? You don't want to allocate into the same fund managers, advisors, etc. So anyway, back to it. The 0.25% daily yield, if you take that and you multiply it by the number of trading days annually, you get a 63% annual yield. So that is the expected annual yield for all 3 funds based on their prospectus. That calculates to a 5.25% monthly yield, which is awesome. So what do I think the yield is going to be? Like after the first payment, it's not going to be 63 because they just started, right? This is like a mid-month payment. I'm glad that they're paying right away. But since they launched last Monday, and they're going to pay, well, they're going to announce this Friday. That's 2 weeks worth. So at least cut the 63% in half, if not more. So I expect maybe a 25 to 30% yield calculated for the puts. So I don't know. I'll still buy into it. I don't care. I like it. I like their strategy. And one thing I wanted to just show you guys, how are they doing? Let's see. I did not look at these. We'll do it together. So they have a put that expires on Monday, September 25th. Well, they have two puts. So let's look at the top one, XSP, with a strike price of 433. So they sold a put that expires Monday for a strike price of 433. So you want XSP to be greater than 433 at the close on Monday. XSP has a price of 432.01. So it's close. It's under though. So right now they're losing money on that move. SPX is a, they're selling a put. Same thing, expires Monday. 4,330. What is SPX? Again, you look at SPX, see the amount, 4,320. 4,320. They're down on that as well. So, not, last week was horrible. Last week, I got killed last week. So maybe Monday we'll open green. Maybe they'll close green so they can make money on these. So let's look at, that was JEPY. Let's check out QQQY holdings. You see what they're doing here. There we go. We scroll down, top holdings, view holdings, download. Again, I always download. It's just easier to look at. It's formatted better. Okay, they sold a put for XND that expires Monday for $148. It looks like XND 148. Right now, it's below that, and NDX, what is it? 14,750. Okay, way below that. So all of their holdings essentially are underwater. So we need the S&P index and we need the NASDAQ index to go up on Monday, especially if you own these. If you don't own these, you could buy in, get a discount. So that's, again, clearly up to you. But that's it. That's all I wanted to cover. The Defiance ETFs, get ready. They're paying out soon, very soon, and they're pretty impressive. I'm a fan. I'm a big fan. I hope they, I hope they do good. So we'll see how it goes, though. Hope you enjoyed this video. If you did, I guess you can click the like. I guess you can send me a comment or don't. It doesn't really matter, I guess. But as long as you watched it, that's what I appreciate. But and as always, you can join my Discord if you want to have a further discussion on this. All right. Thanks for watching, guys. Have a good Sunday, if it's still Sunday. Later.